Hey everybody, welcome to another episode of Blockchain Central. 2017 might easily go down in history as the year of the ICO. This new form of funding raised huge amounts of money, but also made it to the headlines as one of the riskiest forms of investment. In this video, we will explore the differences between the ICOs and the venture capital, the traditional way of collecting money. First of all, we've already covered the differences between an ICO and an IPO. You'll find the link right here. Let's get started with venture capital. Venture capital, VC, investments are institutional investors. Basically, these are companies that collect money from rich people. Then they take that money and invest it in young startups, who give the VC a share of their company in return. That way, the VC has control over the company, can later sell those shares, or receive dividend payments. Of course, a lot of startups fail. As private companies, they do not have to disclose much information, so VCs have to do a lot of due diligence to protect themselves. They analyze the target company and try to estimate potential risk and profits, but once they decide to invest, the company gets a significant injection of cash. An ICO is a polar opposite. Here, the incentive belongs to the startup. They publish a white paper and offer their tokens or coins. The white paper explains how the tokens works and what the vision is. The goal here is to convince as many people as possible to join the cause. Then a lot of people invest small amounts of money, which is then collected in either other cryptocurrencies or fiat money. The good part is that these funds are immediately available to the team. The participants can also make money from an ICO. They just have to wait until the value of the token increases. And how viable is that? Well, some tokens manage to achieve triple-digit growth in weeks. Also, the big difference here is that investors usually aren't in control of the company, as only a few projects gave voting rights to token holders. Outside of financial gains, there exists another incentive to invest in an ICO. People might buy tokens just to show support for a project. It's a bit like Patreon on YouTube. How did all of this start? Well, the first ICO was organized by Mastercoin in 2013. Followed some time later, the spectacular success of Ethereum in 2014. Today, Ethereum has established itself as a primary platform for ICOs. Most are in fact based on it. As you can already see, there are a few differences between the two concepts. Both aim at raising money for a project. Both have an incentive for the investor. ICOs attract large crowds in an open, unregulated process. There is no control over what information gets disclosed, and there are no or only very few contracts in place. VC investments, on the other hand, are more controlled. They take longer, require more diligent background checks, and happen behind closed doors. So, which option is best? VC money is available to organizations that could turn profitable, as all they could offer is shares. ICOs are open to any organization. Even foundations and other nonprofits can raise money. However, a token is required for incentivization, so some business models and use cases are better suited to take advantage of an ICO. From an investor's perspective, an ICO is easier. For most of us, investing via VCs is not an option. It requires a lot of net assets or income. ICOs are accessible because most of them have no minimum investment. Does that mean we should all start investing in ICOs? A word of caution here. ICOs can be great to make the public participate in the success of startups. However, they lack regulations and are prone to irrational hype cycles. As a result, only about 8% of ICOs make it to an exchange. It is also important to note that ICOs are susceptible to scams. Some are set up just to steal money. Oh, and let's not forget about hackers, who can exploit a young company and take over their ICO funds. All in all, the crypto landscape can still be described as the wild, wild west. There is little regulation and a lot of risk, but also many great projects are able to quickly receive the funding they need. But before you go, please note that this content does neither represent financial, legal, or tax advice, nor is it supposed to be understood or interpreted as solicitation to buy or sell any securities, coins, or tokens. Thank you for watching. If you like this video, make sure to hit the like button and don't forget to subscribe to Blockchain Central to never miss a beat. Happy investing.